Hi, my name is Andrei Jikh. Hope you're doing well. Come for the finance and stay for the magic. The magic of the camera that never likes to focus. No, the magic of crypto. Check this out. I don't know why I have this coin, but it's shiny and it looks kind of cool. So there we have it. Ethereum, programmable money. All right, so Bitcoin and Ethereum exploded in price last week, and there's been some huge developments. The biggest story is BlackRock, which is the biggest asset management company in the world with over $10 trillion in assets under management, has officially filed with NASDAQ to get their own Ethereum spot ETF.
It is official. BlackRock is looking to launch a spot Ether ETF. On Thursday, the NASDAQ filed on behalf of the asset manager to launch the iShares Ethereum Trust.
Now, before we get too excited, though, the truth is no one knows if a spot anything will get approved just yet. But the theory is if BlackRock is filing an Ethereum spot ETF in addition to the Bitcoin one, they wouldn't be wasting their time unless they were absolutely sure that it would get approved. And the record speaks for itself. They've had 575 ETFs filed and approved, and only one that has ever been denied. And the SEC will have the final word on that in January 2024. But when it does get inevitably approved at some point, I want you to be ready. Just in case you're not subscribed and you don't watch my future video on this, you'll know exactly how to think about these complex words and terminologies, what they mean, and how they work, because I'm going to give you a very detailed overview of how they're structured, because more or less, they're all kind of the same thing. So with that said, let's dive right into it. The most important points are in the first few pages of this document where it explains the iShares Ethereum Trust and how it works. So iShares is one of BlackRock's subsidiaries. Now, a subsidiary is just a company that is at least 50% owned by its parent company. So for example, Instagram is a subsidiary of Facebook. YouTube is a subsidiary of Google. So iShares is a subsidiary of BlackRock. And iShares has a huge product line of ETFs. And remember, all an ETF is just a giant pool of money that tries to replicate or follow the price growth of whatever it is tracking. And for example, iShares tracks something like the Russell 2000 index, which is just made up of a bunch of smaller companies. There's also TLT, which tracks 20-plus year treasury bonds. There's another one that's really important, IVV, which is their core S&P 500 fund, which is more or less the exact same thing as Vanguard's equivalent of VOO, or VOO, which tracks the stock market, aka the S&P 500. So there are just thousands of these ETFs that all come from different companies, but a lot of them are chasing to replicate the price growth of the exact same things. And so far, iShares altogether has roughly 2.3 trillion in AUM, or assets under management. That's just an insane amount of money. And keep in mind, that's coming from one company. That's just BlackRock, but there's at least 10 other ones that are all chasing to get their piece of the pie. So that's part one of the document. In part two, the document lays out who the custodian will be, or the entity that will hold these assets. The custodian, by the way, has the job of not only holding the assets, which in this case, of course, is Ethereum, but also protecting the assets from any kind of attacks. In this case, for this filing, the custodian will be Coinbase. And there's a couple different ways they plan on protecting the assets, but one of the ways is by separating the money into separate accounts so they don't commingle or confuse their money with our money. They're also keeping a, quote, substantial portion of these assets in cold storage offline so that it's safe from any kind of attacks or shenanigans. The catch, though, is, quote, the hardware, software systems and procedures of the Ether custodian may not be available or cost-effective for many investors to access directly. In simple terms, all this means is if you buy into these iShares, you will not be able to convert them into Ethereum and then withdraw it. You won't have access to that, which kind of makes sense. That's the entire point of what an ETF is. You give up your control, and in exchange, you get efficiency, protection, and simplicity. Now, in part 3 of the document, it talks about something very important called NAV, which is the net asset value. In simple terms, it just means how it calculates the value of the ETF itself. And this is insanely important for two main reasons. And this was one of my biggest concerns, and it's something that I urge everyone to pay attention to when you buy into an ETF, which is to pay attention to how they treat the underlying asset and how it gets its value. Because not all ETFs necessarily hold and derive their value from the underlying asset. Meaning, instead of holding Bitcoin in this ETF, we derive the value of said ETF from our treasury bonds or our real estate holdings, but not necessarily the underlying asset. And this could be a problem. Now, luckily in this case, for this filing, this fund is made up of a combination of both Ethereum itself, like the actual asset, and cash. Reason number 2 why this part of the document is so important is because if BlackRock is actually buying the underlying asset, if they're buying Ethereum, which in this case they say they are, which is good, that would increase Ethereum's price. Because if we get a new influx of investors like grandpa and grandma, and they're excited, they want to put Ethereum and Bitcoin into their 401ks and IRAs and retirement accounts, that would mean BlackRock, iShares, or one of their trustees would have to buy said underlying asset. They would have to buy the Ethereum because it represents the iShares, therefore increasing Ethereum's price rather than some hypothetical magical derivative that's supposed to back it. Believe it or not, this can and does happen to assets all the time when they get securitized. In my opinion, I think gold would be so much more valuable today if we didn't securitize it a billion different ways. Now, for extra nerdy bonus points, here's how they figure out the value or the price of Ethereum for this ETF filing. It's done through a standard called the CME CF Ether Dollar Reference Rate, or ETH/USD/RR. That is the dollar price of one Ethereum, and it's calculated every day between 3 p.m. and 4 p.m. London time, at which point that 1 hour is split into 5-minute intervals, creating 12 time windows where they average out all the exchange volume throughout the day to figure out the price. Those exchanges include Bitstamp, Coinbase, Gemini, Itbit, Kraken, and LMAX Digital, and this whole process is then managed by an independent committee from the CME group. I told you, this video is going to go deep. Next up is the expense ratio. That's the yearly cost for us to hold on to this ETF. Now, expense ratios are one of, if not the most important things to consider, because the more expensive a fund is, the less money you have to invest, and the less it grows into over time, and over a long period of time, it makes a huge difference. Now, it's not something that we have to pay out of pocket to anyone, but this does get reflected in the price of the ETF when you buy it after set expenses. So it's not something that you'll notice, but it is something that you will pay for. Now, unfortunately, for this specific Ethereum iShares ETF, the expense ratio was not listed in the document, but I think we'll find out closer to January when the SEC will let us know. But I can give you an educated, calculated guess as to what I think it'll be. Because right now, the average expense ratio on the market for existing ETFs is about 1%. Unfortunately, the pessimist in me thinks that it's going to be between 1 to 2%, because at first, there's not going to be a lot of competition for who's approved. Over time, that number will come down. But I think for most average people with a 401k, when they want to invest in Bitcoin using these ETFs, they won't even know the real cost of what 1% actually means. But let me show you. If you invested $100,000 and you left it for 30 years, assuming 8% returns at only 1% expense ratio, you would end up paying $250,000 in fees alone. Compared to a simple ETF like VU from Vanguard, which charges 0.03%. You'd end up only paying $8,000 in fees, and you'd have almost $1 million to your name. And that's just the damage from a 1% expense ratio. Some ETFs charge 2%. So if we could get our hands on 0.5 or 0.4%, realistically, I think that would be a massive win. But still, even as expensive as an Ethereum or Bitcoin ETF will be, it's still a far better option, in my opinion, to buy an ETF than keeping your crypto online on a centralized exchange like a lot of people do. And this brings me to the most important point, protection for consumers. During the cryptocurrency collapse, a lot of regular investors became unsecured creditors, which means we became the last people in line to potentially get our money back. But with the advent of the ETF, if we buy that, we are protected from fraud and bankruptcy. So if an exchange or a brokerage collapses or goes bust, we will still be protected by the same insurances that are afforded by these brokers, which in this case is SIPC, which protects our cash and securities up to $500,000, of which $250K can be cash. That doesn't protect your assets, the actual Ethereum, from going to zero, but it does protect you from insolvency and fraud of the companies themselves. So whether you're using a Fidelity, a Charles Schwab, or a Robinhood to buy the ETF, you will be protected, which is not true of the people that are holding these assets on the centralized crypto exchanges. And that alone is a pretty good reason for a lot of people to consider buying an ETF instead and paying the big price. I think a lot of investors are really excited about this moment in time because we were anticipating for BlackRock and all these other institutions to be chasing after Bitcoin and Ethereum. Overall, this is really great news for both investors and consumers. And by the way, another Swiss bank called UBS will allow their wealthy clients in Hong Kong to buy Bitcoin through an ETF as well. There's just so many things happening with Bitcoin and Ethereum right now, and people are just excited and for good reason. And in the future, when these ETFs get approved, I'll do a video breakdown of some of the best and some of the worst ones, but hopefully you got some value out of how to think about these ETFs, even if you never see a video of mine again. But I hope you do, and I hope you have a wonderful rest of your day. Smash the like button, subscribe if you haven't already. Don't forget to grab your free stocks, links are down below, and then go track them automatically with the spreadsheet link down below in my Patreon. Love you. Thank you so much for watching this video. I'd love to see you back here on Monday, Friday, sometimes a Wednesday. See you soon. Bye-bye.